Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, April 1st, April Fool's Day, but nothing fooling around in our videos. We take money very seriously. Our money, your money. Uh, Holding on to it. It's not how much you make, it's how much you keep. But it is Friday and it is me, so that means it's the big show, the expanded edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at next week, and update the key levels that are important, and also update the world famous 21 over 21 leaders list. Let's get right back into it. Market, state of the market. We are in an uptrend. You can see over here on the trend gauge. Not the best week for the market, though, after it got a little bit too extended and then pulled back Wednesday and Thursday, and a sharp close on Friday kept from a 3-day pullback. Really, the question is, are things weakening, or is this just a normal pullback after a pretty strong run up? And that's kind of what we've been battling back and forth, looking at the charts and working on determining. So we did downgrade leaders this week, just the sub arrow from flat to negative after seeing some leading stocks just really get hit hard, namely Bros, GFS, some growthier names taking it on the chin more than they should have if this was a truly strong growth environment. Cyclicals still seem to be leading. So short term, taking a look at the 5 major averages that we review every video, we are trending above the 21-day exponential moving average and the medium-term 50-day moving average. Long-term, early in the week, we got above the 200 in all cases except for small caps, but gave a lot of it back as the week progressed, and we'll take a look at those charts. So we are still on neutral because the S&P 500, which we consider the most important index, is above, and the test of the 200-day have been successful, but we do have the red arrow pointing toward bearish if we see further erosion of the quality of the charts in the 5 major indexes. And again, we'll take a look at those shortly. So what just happened today? Volatile start to Q2. It was a fairly tight range, but extreme volatility within that range. If you blinked, there were 0.2 of a move, a half percent moves happening in a very short period of time. But strength came in, and we did close at the high of the day. So let's take a look at the numbers. The G6, the leader, well, not quite the leader today, as the Russell did lead, but the G6 takes a look at growth stocks. It was strong, very strong in the morning, but faded midday, came back a little bit at the end, up 0.71%. S&P 500 spent most of the day in the red. The strong close near the high of the day, up 0.33%. NASDAQ 100, weakest all day, but pretty decent close, up down 0.2% on the day. Dow up 0.4, mid caps up 0.61, Russell up 1%. Global 60/40, stock and bond up 0.28%, helped out by emerging markets, showing some strength today, and some foreign stocks. GROTECTION in-house up 0.17%. So let's get to the tail of the tape, and then we'll get to the updated 21 over 21 list. But first, let's take a look at the team here at Revere, striving to stay on the right side of the market, bending like a tree in the breeze, flowing like water, whatever metaphor you want to use. We are trend followers. Sometimes the trend's not clear, but when the trend is up, we're participating. When the trend is sideways, we back off a little bit. When the trend is down, we apply the brakes. And if you're interested in this approach, you can email any of us, Dan, Tim, Hunter, Muriel, or Don at revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. Let's get a chart of the S&P 500 here. Let's blow this up a little bit, and let's bring up the tail of the tape. So let's start off with the broader version of the tail. uptrend, of course. The headwinds continue. U.S. dollar strong, inflation very present, Fed tapering, interest rates rising, Russia, Ukraine battling it out, impacting the world economy, sanctions left and right. The put call, the highest it's been in a couple of weeks at 1.02. The VIX down today. That's healthy, down 4.5%. Under 20. Fear and greed stuck right around neutral at 47. So our bull case continues to be what we're operating under, which is S&P initiate a rally, get back above the key moving averages, and the S&P is in fact above the 21, the 50, and the 200-day. Should that falter, our bear case will kick in, and we'll start selling some things. Failure of the rally and a break of those moving averages will certainly send us for the exits. So some news today. Jobs report before the market missed expectations, but prior months were upgraded. So all in all, it seemed to be not impactful toward the bottom line on the market at the open anyway. However, ISM was the lowest new order since May of 2020, and this really took a hit to the transports today. Coming in, we were watching how the NASDAQ 100 and the S&P 500 acted against the 200-day moving average for the NASDAQ 100 and the S&P. More importantly, the 4,600 level overhead, which seemed to flip from support to resistance this week. But both the S&P and the NASDAQ 100 finished lower. No test of either of these levels today. So we opened with a pretty decent gap up, about 0.35%, but kind of put in the top immediately and faded all the way to 1:30 in the afternoon. Then we had a rally fade, but a strong final 10-minute close into the high of the day. So I don't know if that was short squeezing or buy algorithms getting registered. We really don't know what's happening under the hood a lot of the times, but very clearly program buying happening into the close. So some notes for today. Type of volatile morning. A daily stochastic cross down in many big techs. We'll take a look at a couple of charts and I'll show you what I mean about that stochastic cross down, which can be at least a yellow light, and then if it continues and comes off of oversold, certainly can be a long way down. I'm sorry, off of overbought, it can be a long way down to oversold. G6, I mentioned strong in the morning. April, positive seasonality. In fact, over the last decade, it's been the strongest month of the year. So we keep that in the back of our mind. We don't necessarily make buy and sell decisions on it. But the note here, volatile start to Q2, definitely is what happened today. So positive sectors today: oil, gold stocks, cloud stocks, biotech, rare earths, and XME base metals and the defensives, XLP, XLU, XLV, XLRE. That's staples, utilities, healthcare, and real estate. On the downside, banks, they started strong, but they faded during the day. Really weak, though, transports and semiconductors. So since the Taiwan Semi CEO came out and said he's seen very clear slowing of PC sales and phone sales this week, semis, it's like they've gone from there's a severe shortage to, oh my God, sales are slowing, and really a weak, very weak week for semiconductors. So in-house changes, we added MP, and we sold NRGU. Reasons for selling NRGU, booked a little bit of a profit in it. I don't want to get too overweight on cyclicals, and MP has been a stock that I've been eyeing for quite a while. When it pulled back to a reasonable entry point, we kind of swapped out NRGU. We still have two oil stocks in Halliburton and Chevron. So adding some, kind of staying steady on cyclicals. When you consider the cyclical percentages that are in the S&P 500, we probably are about 15 or 16% in them. Got stopped out on Bros as it broke through the 21, did close back above it by the end of the day. And net, bought that when it poked its head above the 200-day moving average. cut it short today, as it was definitely going to close the week under the 200-day moving average, but definitely keeping it on our watch list. And we trimmed some Nvidia with the extreme weakness in stocks today. So the bottom line for all this, the S&P 500 held their 80 MA on a pullback, and also held the 23.6% fib retracement of the recent move. Those are both healthy signs, and that's what makes today's lows pretty important next week for the S&P 500 and the NASDAQ 100. So let's take a look at the chart here on the S&P. You can see the extreme move up starting with the 314 bottom. And when you put that in context or in perspective, the pullback over the last 3 days, and really I'm saying it was 10 minutes short of 3 days. We bounced right at this 4,500 level, right above that, which is important. It's been support. Looking to the left on the chart, it was a prior very important support level that we struggled to get above just a week and a half ago. So great place to bounce, and then finished above this purple line. That's the 80 MA. And that, and then the 200-day moving average right below it, just 1.3%, and the 21 will come up through the 200-day probably Tuesday of next week. So a lot of support right around this area that really needs to hold. A lot of good setups that we've got our eyes on to take advantage of if that support comes to fruition. So let's go to the NASDAQ 100, the QQQ. Similar pattern, however, the 200-day overhead is acted as resistance. We had one close above it, now 3 negative days over the last 3 days, undercut, but did reclaim by the end of the day. We closed in the upper part of the range on the NASDAQ 100 and above the 80 MA. Let's go to the Dow Jones Industrial Average, which is where we failed on the 200-day moving average also. Come on, where we failed on the 200-day moving average. There it is. You can see the poke above it on Tuesday, inside day on Wednesday, failed on Thursday, did bounce off the 21 on Friday, and really closed right around, just basically right on the 80 MA there. Let's check mid caps. Another one that gapped very strongly above the 200-day on Tuesday, failed or bounced there on Wednesday, undercut on Thursday, bounced at the 21, so we're between the 21 and the 200 on mid caps. And finally small caps. Can't get above, we really can't get anywhere near the 200-day moving average. Again, the gap up that faded, but we did hold the 21. So between the 8 and the 21 providing support on a lot of these moving averages. When you put it in context with the big recent move, it's acting okay. But I've got stochastics on here up at the top of some of these charts. Let's bring up the SPY. This crossover is what I'm talking about. You can see several times when you get the crossover coming through the moving average and then come below this 80 level, it can lead to some severe pullbacks in the indexes. So that is also something that we're keeping an eye on. There's the SPY, there's the Qs, so it's happening there. Starting to cross, didn't complete it and didn't come through the 80 level, but this is something we're keeping an eye on. Here's Apple, same thing happening there. Let's take a look at Google. Same thing happening there. So again, secondary indicator, but it's an indicator of what's going on with price. So it is definitely something that we pay attention to. So we went through the 5 moving averages. Let's get back to the tail of the tape here. You can see where we closed today, 45.46. So inside some prior ranges. Volatile day, did close near the highs. Improvement over yesterday where we had harsh selling into the close, but fairly normal in the charts. But we do have our eye on the pullback in some of these leading stocks because it had been harsher than we would have expected it to. And you'll see a couple of these when we go through the 21 over 21 list. And actually no time better than the present to do that. So let's bring up the 21 over 21 list. We've got 12 sectors, 20 different industry groups. And first we're going to start off with the ones that got the boot. A leader that we owned that we got stopped on, and it just really fell apart, GFS. The fact that it's a semiconductor which had been a leading group up until really the last 3-4 days, consolidating nicely at the highs of this flat base, but really just came apart Wednesday when we got stopped out, also Thursday, and now it bounced at this 60 level, which was a prior support resistance battle level. This is actually a low risk entry, but with it getting stopped out in the 8 and the 21 turning over, we're not going to take a dive back into this. There are a couple of semis that still are holding up better, and we still own Nvidia. So GFS got the boot, and another one that really got the boot, and this kind of surprised me a little bit, but transportation rail. The rails have been holding up really well. They're not as impacted as the truckers are by gas prices, but after that ISM report came out, transports were just weak all day. You can see the big volume selling as it broke below the 8 and then the 21 after riding the 8 higher. This is one of those where, let's take a look at a 5-minute chart on it. You didn't act quick. You really took some pain, and we battle all the time. Do we wait till the end of the day to see if something comes back? But this just continued to trickle lower and lower all day long. And sometimes that first sell is the best sell, right when the 8 started to roll over, when it broke below it. So Union Pacific, let's take a look at transport since they were weak. You can see that big, a failed break above this 270-ish resistance with the big move up on Tuesday. Pulled back, reasonable pullback Wednesday, Thursday, but just basically coming apart Friday, breaking below the 21, the 50, and the 200 day. You don't like to see the transports acting weak, as they're a signal of the underlying health of the economy. So the 21 over 21 list, UNP punted, GFS punted, added to stocks that we own. MP, very interesting. Do some reading up on this one. Metal and mining, but they operate in the rare earth segment, which has been hot with all the EVs going on. So you can see the power from the pivot, up 20% in less than 3 weeks, gets this flag. This is the first reasonable pullback since then. Basically bounced off the ADMA. Volume patterns are just phenomenal here. Look at all the big blue bars over the last 3-4 weeks, and then when it's down, it's on lighter volume. Did it today? Another one of those lighter volume down days. Volume patterns are just perfect, and as always, we've got a type stop on it, but one I've been wanting to get into. And we did get into it today. So that's the first ad. The second ad is something that we bought last week. Tesla, gap up. We bought it last week. We're fortunate to have a gap up on Monday when they filed for shareholder permission to do another stock split. I think they're eyeing the Dow Jones Industrial Average, but very reasonable lower volume pullback as the week went on, and there was some weakness in the market in growth tech type stocks, but this one held up extremely well, holding above the low of Monday's gap up. So those are the two that were added. Let's go through the rest of the group. Pure Storage. This is having some trouble getting above the top of this breakout, which is kind of typical. Breakouts aren't setting the world on fire. In fact, a lot of them are failing, but first time it broke below the ADMA after going sideways, relative strength holding up pretty well. Sedge, this is one that just wore me out this week, but is still holding above the 21-day exponential moving average. Nvidia, so strong recently, gave it back the last 3 days, quite a bit of it, but bounced near the 21 today. Bros, I got stopped when it broke below the 21, and this just is a complete failed break above recent support. This fantastic day on Tuesday, up 15% at one time, closed up 12.4%. 2 harsh days of pullback. We sold half of it yesterday and the other half of it today. Costco continues to be strong, just trending higher above the ADMA. Freeport going sideways after testing the 21 earlier in the week. PSA, REITs were very strong this week. You can see this one trending above the ADMA. Dollar Tree, along with Costco, continues, people are discount shopping when budgets are tight. And that's being reflected in the stock charts of Dollar Tree and Costco. LNTH continues to poke its head around new highs after testing the 21 late last week and early this week. Halliburton, one of the two oils that we continue to own, bounced off the 21 this week on that big oil shakeout day. Palo Alto shook out below the 8, back below the 8 today, but this was after 11, I think, straight up days. For PanW was battling Apple for the crown of consecutive up days during that period of time. Newmont Mining, this would have been a great shakeout buy on Tuesday off the 21, closing at all-time highs. Phenomenal strength and really good strength on gold stocks in general. Nucor, flagging a little bit off of all-time highs. We sold this when it got extended, but we've got eyes to get back in it. It's still below where we exited. Arch Coal coming back up through the 21 by the end of the week. Nice digestion after it had a really strong run. AbbVie continues to just be about a frozen rope. First trip below the 80 EMA today, but it bounced off the 160 level. Berkshire Hathaway, 40% of Berkshire is Apple. First move below the 80 EMA today, but extreme strength there. And that conglomerate, Zim, after a strong move and a big dividend, consolidating over the last week and a half. CF, another one that we sold when it was extended, pulled back harshly. This would have been another good entry, but it's right below 100. We sold out at 106 and 103 on this one. Still have our eye on possibly getting back in. And finally, Devon touched the 21 a couple times this week. As oil showed a little bit of weakness, a little bit of lack of relative strength, but Devon's been on here for a very long period of time. So that's going to wrap it. As always, like your feedback, you can email me, don@revereasset.com, phone 855-REAL-WEALTH. This weekend, clients will be getting a quarter-end video emailed to them. I'll do it this weekend. It'll probably be mailed Sunday or Monday. So that's going to wrap the April Fool's edition of the big show. Let's take one more quick look at what the key is on the S&P 500 for next week. Is this 4,500? Really, it's about 4,450 to 4,500, very key area. Concludes the 21 and the 200-day moving average, and that's been a big support area that was resistance for a while, got back of it, coming back and tested it now, that 4,500 I'm speaking about. And then on the upside, we want to get through 4,600 and stay above, obviously, this 200-day moving average. So wrapping up the week ending April 1st, this is Don Vandenbord with Just the Facts, telling it like it is. Thanks for listening and have a great weekend.